Today on the Brisbane Property Podcast, we are going to be tackling the big debate. If you have $700,000 to spend, would you buy a unit or townhouse in an urban area of Brisbane, or would you head a little further out and buy a house on a single block? We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome back to another episode of the Brisbane Property Podcast. Hopefully everyone's had a nice break back into things in 2025.
Yes, welcome back, everybody. I'm sure by now there's many of you that are settling back into the swing of things, back at work perhaps. And for those that have kids still on school holidays, that juggle is real. If you are back at work, we know we've been there before. We know that that is a tough position to be in. However, for those still enjoying their summer holiday break, we hope you're sitting somewhere amazing with a view of the beach or perhaps out in the country somewhere and enjoying the podcast episodes that we continue to produce for you throughout the entire festive season.
So an interesting one today, and I think this will interest a lot of listeners, I think anyway, because it's always that debate about urban and suburban debate, about whether you should be buying something closer into the city, something a bigger block of land, for example, out further. And it's quite a debate when you talk to people about it, I think.
It certainly is. So for today's episode, we have decided to really unpack the pros and cons of both types of asset classes. And we're going to assume that we have $700,000 to spend. Now, there's a few reasons why a $700,000 budget has been allocated just for the purposes of this discussion. Firstly, the first home buyer stamp duty concessions, the threshold for those stamp duty concessions is $700,000. So we see a lot of demand in this space for houses, units and townhouses under this dollar value. We also see a lot of investors have budgets under $700,000. And so investors often ask, where should we invest our money? Now, of course, when we're partnering with investors, we partner with all sorts of investors, and many have budgets well in excess of $1 million. So the strategy for someone with a $1 million or a $1.2 million budget potentially is very different to the strategy for someone that may have a budget under $700,000, because we're using this as the threshold for today. And I will also state up front that, of course, what we're about to discuss in the episode today is general information only, and we always recommend that people get expert advice in terms of their personal circumstances, because not every type of investment is going to be suitable for every investor. So it's absolutely critical that the asset that you buy is aligned with what your personal circumstances dictate.
So around that 700, am I around it, or can I have a little bit of flexibility?
We're around it. No, if we're using that as the threshold, because I have sort of looked at median values in Brisbane to determine where we could buy certain product types, and that's sort of the information that we're going to be sharing today.
Okay, so I guess the options there are, when people are listening, wondering where do I buy, what do I buy for that sort of budget? I guess it comes down to, if you get closer towards the city, you're looking more like a unit type of setup. Mm-hmm. Or you move out towards the suburbs where you purchase something like a house with a larger block of land.
And of course, there's that in-between product type in Brisbane, which is the townhouse as well. So again, there's probably three different property types: unit, townhouse, or house. And each of these property types is going to get a placement or a purchase in a different location in Brisbane with a $700,000 budget. So that's what we're going to unpack.
So for our listeners, would they be in between for a townhouse? When we're talking about CBD, out to the suburbs, townhouse, you're probably a little bit further out than your unit side of it.
Yeah, middle ring suburbs for a townhouse with this budget. And again, it does depend on the size of the townhouse. A 2-bedroom, 1-bathroom townhouse is obviously going to be a more affordable option than a 3-bedroom, 2-bathroom townhouse. Number of garages, carports versus garages as well. So there's a lot of things that will determine the value. We are going to speak more generally about product types and locations.
Okay, so let's jump into urban living to start with. So we're looking at that urban living. We're talking townhouses, units, that type of thing, a little bit closer towards the CBD. Lifestyle, obviously there's some lifestyle benefits. You get closer to the city. and you will attract quite a lot of buyers and renters in that area too.
Yeah, look, I think that we cannot deny the impact that COVID and the pandemic had on our lifestyles. Initially, it was a flight to space. Everybody wanted to move a little bit further away because we had more ability to work from home. In fact, we were locked in our homes. So people wanted bigger homes. They wanted that space because we actually didn't have the ability to go out and enjoy the fruits of what we typically and ordinarily get to enjoy. Now, fast forward to 2025, and of course, the way we live now has returned largely to that pre-COVID way of living. Many of the employers are requiring their employees to return to the office. The CBD is in Brisbane is reinvigorating. There's more and more people returning to the offices in that space. And of course, we're seeing this proliferation, I guess you could say, of the suburban inner city precincts whereby you've got coffee shops and restaurants lining local streets. And some of the things that the locals in these inner city hubs are attracted to is that walkability lifestyle where you are able to jump on a train and get to work in 10 or 15 minutes, or you can walk to the local coffee shop or the local brewery, microbrewery, and that is a lifestyle choice that many people make. So I think that the appeal for urban living, especially for the younger demographic, the first home buyer demographic, of course, but also professional couples who may not already have children, but also young families that are more comfortable to live in smaller environments with a smaller backyard. Lifestyles are very busy, so people actually no longer value the big block of land with the hills hoist the way the previous generation valued that space. So these are the lifestyle changes that have come about because of the way we now live.
It's interesting. Okay, so when you're talking about this lifestyle, and we do live as ourselves personally, a bit closer to the CBD, and we know Brisbane really well. Okay, Brisbane is quite walkable. Will become even more walkable, I think, as we start to have more infrastructure and changes. You've just got to jump. You can jump on an e-bike, for example. You can shoot into the city. You can go down along South Bank. I'll give you some examples of some of the things we might do. On a Sunday afternoon, you can go down to the green. You can sit down, listen to some music, have a glass of wine. You could e-bike across the bridge, back along past the Queen's Wharf. Even down towards Housemouth Wharf. So the river, even though it winds around our Brisbane River, it's like a snake, you can actually ride and walk around that area. And as you mentioned, Melinda, the city is changing as well. So the city now post-COVID, you've got Botanic Gardens that link up again, and that city is starting to change. The other thing to keep in mind is also maintenance. Okay, so when we talk about lifestyle for people, they want to spend their weekends or their Sunday afternoons doing what I just said, and not having to mow a lawn or clean up the house. And because the bigger the property, the more maintenance is going to be. So you've got that lifestyle side of it where you're changing from not just the lifestyle of going and relaxing and doing things, but you don't have to do the chores around the house on the weekends as well.
And I think also it is relevant to different demographic groups, and different demographic groups may see more value in that urban living. Others may prefer suburban living with that large backyard and a family home. For example, if you are a professional couple, or if you are first home buyers and, even downsizers, a lot of the lifestyle things that you may be looking for may be very, very different to the lifestyle things that a family with young children may be looking for. So we see different buyer groups looking for different product types in different locations. Now, I'm just going to talk a little bit more about the long-term demographic trends as well, because I think that when we're discussing which asset type might be a better purchase, one way we can get a snapshot view of what's happened is to look backward, but there is a reason that the windscreen looking forward is larger than the rear view mirror, and that is because backwards only tells us a certain amount of information based on the circumstances that were in place during those times. As we look forward, we've got to consider, are circumstances changing? Is the supply level likely to increase, and where is that demand likely to come from? So if I'm going to discuss demographic trends, I do know that the Australian government puts out information about population trends over the next 30 to 40 years. And the population of Australia is projected to grow predominantly from international migration. And the demographic group that are likely to migrate here, according to the federal government, the largest demographic group are from Asian descent. Now, we can take some information from that to get an understanding of how does that demographic group like to live? Are they coming to Australia to relocate to suburban areas where they can have a really large home and a large backyard? Or are they likely to be more accepting of smaller accommodation types closer to the cities, where the lifestyle may be similar to what they've experienced back home? Now, of course, I don't have the answers to those questions, but these are the sort of questions that we need to ask ourselves when determining where is that long-term demand likely to sit, because there's definitely going to be demographic trends, in my opinion, that will change the perception of value for different property types.
One other thing just on that, young professionals, downsizers and those types of people that are looking probably more at the urban type of living is the gentrification of those areas. Okay, we're talking about probably older suburbs that, as you mentioned earlier on, have now got the microbrewery that have popped up. So those types of things are popping up. They're becoming more of the trend that people go to those smaller things, the coffee shops and those types of things. And that's the lifestyle that we talk about, as opposed to when you're out in the suburbs, it's a little bit more spread out. Okay. So they're not as close to have those little places close by as well.
I'd like to sort of also touch on rental returns while we're talking about that urban living. And we are going to get to suburban living because there's definitely advantages to people that prefer that option. So this is not a one-sided debate. This is going to consider both sides. With the urban living, we've got to consider what are those rental returns. And we know when we look at the rental yields for Greater Brisbane, rental yields in the unit and townhouse space are higher than they are in the detached dwelling space. And what that means is for a given purchase price, and for this example, we're using $700,000, the amount of rent that you will achieve at a gross level, that is before expenses, is likely to be higher than a house. Okay, so that is at the median value level. Of course, with rental returns, not only do we need to track rental returns at the time of purchase, but we also need to understand what is the likely direction of rents in that particular location. And we're going to discuss more around the investment fundamentals and the investment potential a little bit later, because I think that this is something that needs to be considered, because we need to understand the affordability levels of the tenants that are living in that particular location. So rental returns should be similar based on yields, and in fact, through my analysis based on the inner city locations where you may be able to pick up a 2-bedroom unit or townhouse, the yields will be somewhere around 4.3 to 4.7. Sometimes yields are a little bit higher. And that's going to be somewhat similar to the yields that you will actually achieve on some of the suburban options that are further away from the CBD, that are houses for a similar price point. And we're going to discuss some of those areas with you shortly soon.
So if we're shooting out to the suburb areas where we're looking around that $700,000, you get a bit more space. Okay, so you're probably more family appealing. It'll appeal more to families that are, looking for a bit more space, probably have the dogs and a bit more yard space where the kids can run around. And they'll obviously like to move into those areas.
Yeah, absolutely. Family appeal, without a doubt, is one of the reasons why many people would prefer a house with a yard as opposed to a unit or a townhouse. This is one of the primary reasons why we will continue to see demand in this property type. I think also that we are starting to see more and more suburban developments on the outskirts of our larger capital cities, and we're certainly seeing that here in Greater Brisbane as well. Now, in terms of suburban living options under $700,000, unfortunately in Greater Brisbane, there's very few suburbs now where the median value for a detached house sits under that $700,000 threshold. There are some, but there are not many. So when we compare that to the median value for a unit, many of the inner city suburbs within 5 to 7 kilometres from the CBD still have a median value under that $700,000 price point. So the location of where that budget will buy will vary considerably. Unit townhouse within 5 to 7 kilometres of the CBD. If you go to a suburban house, the suburbs that I have identified as still having a median value under $700,000 are at least 30 kilometres away from the CBD in Brisbane. So the majority of those suburbs as well, and there are only a handful of them, the majority are located in the areas of Ipswich and Logan. So again, not much available nothing available in the Brisbane City Council region, not much available at all in the Moreton region. These locations are in Ipswich and Logan City Council regions.
So obviously those types of things people need to take into account travel. Okay, because there's certain areas, I know there's some trains that go out towards Springfield, those areas, which is a part of Ipswich, obviously the train to Ipswich, and you do have your travel involved in things like that. So again, people might work out in those areas, but you also have to account then if you're going to drive, keep into account when you talk about 30 kilometres, 30 kilometres can be a long time in a car, okay, because you get all that traffic as well when you start to drive.
I think one of the things that a lot of people don't consider is that commute time. And, you know, we've looked at transport studies that have been published by Infrastructure Australia, which show the average commute time for some of the major road corridors throughout Southeast Queensland. And two of the most congested roads in Southeast Queensland are the Centenary Highway, or the Western Freeway, which is the main motorway, if you like, between the Brisbane CBD and the Ipswich region. And the other most congested road is actually from the Brisbane CBD down through to the Gold Coast. And that is the large feeder road for people in that Logan region. So it is so important for people to understand that congestion becomes a problem if there's no easily accessible public transport in these things. And these are now some of the layers that people are considering in terms of lifestyle when they're making this choice for urban or suburban living as well. Whilst many of us still like the appeal of a larger home and a backyard, some people are now compromising on that larger amenity to save time in the busy lives that we now lead, to be a little closer and take on board a smaller dwelling, because transport times are significantly increasing because of more and more cars on the roads throughout Southeast Queensland.
When we talk about infrastructure and amenities as well, keep in mind when you've got that suburban area, generally what you do find is they've built new, because they're opening up new estates, they've built new small shopping centres or cafes, and so little precincts of shops and cafes and hairdressers and bottle shops and all those types of things in those little areas. So generally what you find is they're not as spread out like all the rest of them are in the city, because there's so many more. They build these little clusters that the little areas can actually get access to them. New schools, those types of things. So there are the amenities, the infrastructure is built there, and that's how they've actually purpose-built these new suburbs in those outer areas as well.
So if I'm just to run through some of the suburbs that actually still enable a median value of a house on a single lot to be purchased under $700,000, these suburbs include Ipswich, Loganlea, Boonah, Brassall, Redbank Plains, Crestmead, Raceview, Kingston, Logan Central, North Ipswich, Woodridge, Goodna, Buval, East Ipswich, Bundamba, North Buval, Riverview. There are a couple of others, but that gives you a general snapshot view of the locations where the median value is still under that $700,000 price point for a house on a single lot. So given that information, Scott, I'd now like to talk about the investment potential, because for a lot of people, price is the consideration or the major consideration of affordability. A lot of people think, well, you know, anything above a certain price point is no longer affordable, so we don't want to be buying that type of property. But we actually assess affordability based on the demographic of who lives in a particular location at a specific point in time. And of course, we have access to demographic information on people's incomes from the census data that's reported across all of the Australian population. Fairly frequently. It gives us a snapshot view of the suburb, and we can then overlay the median dwelling values for that location with the median incomes for that location, and that gives us an indication of how affordable those locations are for the locals that live there, or how affordable the rents are in those locations for the people that live there. And this is how we can then assess what the potential for increased capital growth or increased rental price growth might be as we look forward into the future.
One thing we do get a lot when people do inquire here at Streamline Property Buyers is I've got a budget of, let's stick with the 700 that we're talking about now, and I want a house. I want a plot of land because I want more capital growth. So I want something that's got capital growth. So everyone tends to think their mindset is it has to be a house and land. Okay, and this is where we're talking about the investment side of it to understand what the difference is between the house side of things and the unit market / townhouses, because townhouses are in with the unit market.
And I think the biggest thing about Brisbane, which again, many of the listeners may already know, but many may not, is that Brisbane is a relatively low density city and has historically been a much lower density city than other cities such as Melbourne and Sydney. And therefore, the default position for most people has been we need to buy a house in Brisbane because off the back of the city plan change in 2014, we've really only seen an influx of higher density unit development come through since then. Of course, there's been a sprinkling of units and townhouses that were built prior in some of the lower density areas, but nothing of that, or not a lot of that high density dwelling type, which I know is much more prevalent in some of the other major capital cities around Australia. So when we look historically at performance, when we look at the last 30 years, without a doubt, houses in Brisbane, according to the data, have outperformed. However, the volume of units that can be grouped into performance here in Brisbane is so limited, and it is now skewed because of the large volume of brand new stock that's come in literally within the last 10 years into the market. So the best opportunity to get an understanding of what's likely to happen in the future is to look forward at the supply and demand metrics. And that's one of the reasons why we wanted to produce this particular episode, because we want to enable people to stop and think about where is that demand likely to be 5 or 10 years from now? What is the future supply of each product type likely to be? And therefore, how are we likely to see property price pressure applied to different product types?
Most people, when you talk about units, tend to think high rise. There's a lot of units in the complex, okay? There's different types of products, okay? And this is where the local knowledge of Brisbane really comes into play, okay? So if you look at, say, 2014, when we had the council zoning through, and they changed the setup basically for a developer. If you're looking to build some units, the city plan was changed and they increased the car park ratio. Okay, so when a developer is building a product on a site, you calculate how many car parks you need per unit. Okay, that will use up a certain space, and there's also then landscaping requirements. So they also then increase the deep planning. Okay, so we're taking up plots of this land for car parks, which you don't really earn much money on, and landscaping, which you don't really earn much money on. So you're taking that away from the developers to restrict how many units you can actually build on a site. Okay, so that made it a little bit harder. We then had 2016, where we had an influx of units. If anyone was in Brisbane at that time, you look in the sky and you would just see cranes everywhere. So we had cranes popping up throughout the place. There was a lot of units getting built at that time. A little bit more high-rise type of units in your Hamiltons, West Ends, in those sort of areas. And then we had an oversupply of the units. So we stopped building the units because it became that oversupply was there. It was a risk for a developer. From there, we've had COVID and construction prices have increased. Okay, so now construction costs are so high that building the small complex of units just doesn't stack up. You have to build the high rise units at a higher price point for that to actually stack up to build.
And I think we've mentioned on a couple of previous episodes, the cost to construct some of these units now is well ahead of the actual price to purchase the established properties in many of these locations. And so therefore, at some point, prices need to catch up. And, for higher density units, even one of the developers here in Brisbane was saying the product that they're now building is really targeting a high-end buyer because they can't actually build these products for less than $1.2 million for a 2-bedroom unit to bring it to the market. Now, of course, that's a huge price escalation on the established price for something similar in the same region. Scott's rightly pointed out not all units are created similar. And when looking at a unit, especially if it's an investment unit, it really is important to understand location and land component. When you're buying a unit that might have 60 or 70 in the complex, it's a very different proposition compared to a unit that might only have 4 or 6 in the complex on a decent sized block of land in a blue chip location. So not all units are created equal, and you can still apply a land to asset ratio to a unit purchase if you understand the unit value and the land value and apply a ratio to determine that land to asset ratio for that particular asset type. Of course, when you're buying a unit, you must also account for the fact that there will be body corporate fees. So it's not just about the gross yield, but it's also about the net yield. And many complexes have higher body corporate fees than others. So it's really important to do your due diligence if this is the product type that you're considering, especially as an investment. But Scott, I'd like to talk about tenant demand because, of course, we are in an environment right now where there's very low vacancy rates across many parts of the city and throughout Greater Brisbane. And a lot of that is because we haven't built enough properties to sustain the number of people, the growth rate that we've had into Southeast Queensland. So tenant demand is very strong in the inner city market, but also in some of the outer areas, suburban areas. The biggest difference that we are starting to see is affordability pressure. Okay. And I think this is the big thing that many investors need to understand. And I have stated a number of suburbs that still have a price point below $700,000 where you can actually still buy a single home on a block. And I've done some research into median incomes for the locals that live in these locations. And based on that information and the rents that they are actually paying based on median rents for each of these locations, many of the tenants in these areas are in a state of mortgage stress, meaning they're spending more than 30% of the household income on rents. And what this means is that you're going to find a time frame or a price point where people just cannot continue to afford to pay more, and therefore rental price growth will plateau. And therefore, as an investor, the income that you're generating from your asset might not continue to grow over time. And these are all things that is so important for you to consider as an investor if you are considering, different locations.
I think one other thing that we really look at a lot is when we talk about supply and demand is scarcity as well. So when we talk about, say, high-rise units, there's not a lot of scarcity because there's a lot of units in that complex. When we talk about a new estate, for example, if we look out in the suburbs and we go to a new estate, they're building another stage to that estate. So there's not as much scarcity there. Okay, that's a big thing we look at as well. So the scarcity is really important. So as you come in towards the city, there's less land. Okay, so you're buying in something where there's less land, it's more scarce. That's what's appealing, and that's what's going to help that investment as well.
And I think the other thing that is very specific to Brisbane that we will highlight before we wrap up today is that Brisbane has a lot of character Queenslander homes, and if they are covered in a character overlay, they are protected from demolition. So despite any land zoning that might permit higher density development or unit or townhouse development, if there's a character home on the site and the character overlay exists or any heritage overlays exist, that home needs to be part of any future development, and then that becomes very prohibitive to actually increase the density in those sorts of suburbs. We know, based on Southeast Queensland's regional plan, the areas that are zoned or highlighted to accommodate higher density development in the future. And I can categorically say they are not in the areas where the character overlay exists. They are in areas outside of that inner to middle ring part of Brisbane. So if you are wondering where the future supply of units, and particularly high density units, are likely to be, they are not in the locations that are currently protected from demolition. And of course, that also might give you some insights into the types of units that we believe could be a strong prospect for future growth, as well as rental price growth, because you're in demographic areas where people are on really high incomes in those urban regions as well. So that's probably going to give plenty of people insights into the types of properties that from a unit perspective, that are going to be better performers long term.
So, Melinda, as a property expert, how should investors weigh up the pros and cons of urban versus suburban properties when building a portfolio?
Look, I think as with any investor, it's important to understand the timeframes. That is, how long do you intend to hold the asset? What's your exit strategy? Do you intend to sell or hold the asset for income? Also, what is your financial structure? So are you buying in your own names, or are you buying in some sort of entity? And how are you financing that? Is it all cash? Is it part cash with funding up front, or is it all borrowed funds? Because obviously interest rates are going to have a big impact on the cash flow position of a property. Once you've got an assessment of your personal situation, you might find to borrow funds that you need a certain income requirement to satisfy lending. That would come into play to determine the asset type that's going to be right for you. We always believe that low risk investing is going to be the safest option for investors long term. And low risk investing involves purchasing in areas where the locals who live there can continue to pay more for properties and continue to pay more rent for properties. And that is going to be the best bet to safeguard your investment long term. We also believe in understanding that supply and demand ratio that is likely to come in the future, so that you can make the decision that's going to be aligned with your portfolio. So for me personally, with $700,000 in Brisbane, I would be looking for specific pockets in a unit or townhouse product much closer to the CBD, where a lot of the infrastructure that is being developed is likely to fast track value growth and rent price growth in the foreseeable future.
I do agree. And just one other thing to consider when people talk about buying a property they can add a bit of value to or improve and things like that. Now, I am a licensed builder. This is the sort of thing that I look at, and I do as well. You keep in mind that, yes, when you get a house, you might be able to do some more like larger type of things to it because you've got a bit more space, or you could add extra rooms or things like that, obviously depending on approvals and if you can do it. But don't forget, with a unit, there's less cost. Okay, so it's a smaller building. So you're talking probably a bathroom or two, one kitchen. So it's a lot smaller, and even the room, the size of the unit is generally smaller than a standard house. So your costs are going to come down. Your maintenance side of things, externally, it's body corporate. Okay, so again, I know you pay into the body corporate side of it, but a lot of that is covered with the body corporate. So if you're talking about investment wise, that takes a lot of stress and takes a lot of hassle away from you, as opposed to a house. You're responsible for everything. The fences, the retaining walls, the yard, you name it, it's all yours and it's your responsibility. So can be less stress, less maintenance, and even if you're looking to do improvements, renovation, those types of things, whatever you do on the inside of a property, you do what you like, really, and it's probably less when it comes to a unit.
Absolutely, and that's a wrap. So hopefully we've highlighted pros and cons of both approaches. Of course, we always recommend that you get some advice that's going to be tailored to you personally based on your risk appetite as well as your personal circumstances. But that helps. Hopefully the information that we've shared does help people to really fully assess both options.
And it's knowing Brisbane in particular. That's one thing that we keep talking about. Brisbane is different to everywhere else.
Yep.
Okay, so don't look at units in Sydney and Melbourne and compare that to Brisbane. It is very, very different, and that's what we're obviously here to help people with. So hopefully that's been some good information as usual. I will let Melinda wrap it up. It's great to be back talking to everyone again, fresh in 2025, and we look forward to it bringing more information, more guests, and helping people out with property. If you or anyone is looking for property in Brisbane, reach out. We're free to talk to. And if they want to know a little bit more, reach out to the team at Streamline Property Buyers. We're more than happy to have a chat. And if we can help out, we'd love to. So I'll let Melinda wrap it up as I normally do. Thanks very much for listening. Take care and bye for now.
Thank you once again for joining us on the Brisbane Property Podcast. We hope you have enjoyed this episode. We would love for you to leave us a review and share the episode with friends and family. In the meantime, we wish you a fabulous week. Enjoy your holiday if you're still on holiday, and we look forward to speaking with you again next week. Bye for now.